Let's begin with business stories now. As the Senate and House of Representatives have passed the 2023 appropriation bill presented by President Muhammadu Buhari before the House. The passage, the appropriation bill spending of 20.51 trillion naira was raised by 1.32 trillion naira to 21.82 trillion naira. Well, this comes a week after President Buhari sent a letter to the National Assembly seeking approval for the additional budget for 2022. The supplementary budget is to address food security following the devastating floods across the country, as well as damage to road infrastructure and water sector. A breakdown of the supplementary budget shows the Ministry of Agriculture is to get 69 billion naira, Ministry of Works and Housing 704 billion naira, FCT 30 billion naira, and Ministry of Water Resources is to get 15.5 billion naira. Meanwhile, the Senate is urging the Central Bank of Nigeria, that's the Apex Bank, to urgently extend the withdrawal of old currency notes from circulation from January 31 to June 30, 2023. The Senate's resolution was equal to a point of order raised by Senator Mohammed Ndume during plenary on Wednesday. The Apex Bank had on October 26 announced plans to redesign the 200, 500 and 1,000 naira notes. The lawmaker also said that access to the new notes would be compounded by a recent circular by the Apex Bank, which limited the amount of cash withdrawals by corporate entities. And contributing, another senator, Mr. Adamu Alero, said it was true that rural dwellers were not aware of the currency redesign in the country. To other stories now, the Association of Licensed Telecommunication Operators of Nigeria says the accumulated debt from the Unstructured Supplementary Service Data, USSD, owed to them by banks rose to 80 billion naira as of November this year. Chairman of the association, Mr. Gbenga Adebayo, made this known to newsmen, insisting that a time would soon come when telecommunication companies would be forced to withdraw from USSD services as banks refuse to pay. Deposit money banks, DMO, and telecom operators have been at odds since 2019 over non-remittance of USSD fees. Well, in 2019, TELCOs said they could no longer provide the services for free and proposed to take a cut of 4 naira 50 kobo per 20 seconds from the charges paid by customers to the banks. However, the banks kicked against it, alleging that it would raise costs by 450%. The Port Economic Regulator, the Nigerian Shippers Council, is responsible for protecting Nigerian shippers and promoting the development of inland dry ports. As 2022 draws to a close, just a day away, the Executive Secretary, Mr. Emmanuel Jime, spoke on Business Nigeria on Wednesday to discuss how the council fared in 2022. The Shippers Council boss, among other things, gave insights about the council's plans for 2023, as well as shed light on some challenges facing the Nigerian Shippers Council. Take a listen.
That the Nigerian Shippers Council conceived way back, as far back as 2000. And the reason for the conception of this inland dry ports, first and foremost, was obviously the recognition that the shipping community in this country is spread in all the nooks and crannies of Nigeria. There's always this misconception of people thinking that for you to engage in international trade, particularly by way of export, you have to probably be living around the seaport cities. That's not exactly true. What has happened, therefore, is that the establishment of this inland dry ports has brought shipping closer to the shipping community in all of the nooks and crannies of this nation. That is the first thing we've done with inland dry ports. The second is that we have actually managed to effect a level of decongestion of the seaport, because obviously now that you have other facilities through which business or trade can be carried on. It presents an advantage, an enormous one at that, for the Nigerian businessman, to take advantage of the location of this port.
Executive Secretary, Nigerian Shippers Council, Mr. Emmanuel Jime, speaking exclusively to Business Nigeria yesterday. Let's turn to global markets now as Asian equities weakened slightly today as soaring COVID cases in China unsettled investors and cast doubt over chances of a swift recovery for the world's second biggest economy. After realization of stringent COVID curbs, MSCI's Products Index of Asia Pacific shares outside Japan was down at 0.78% and was set to end the last month of the year 2022 in the red zone, capping for a brutal 2022. Futures indicated the dual mode was likely to continue in Europe, with Euro Stoxx 50 futures down at 0.24%, German DAX 0.30% lower, and FTSE futures down at 0.36%. And China shares fell to 0.3%, while Hong Kong's Hang Seng Index market as well slid at 1%. Japan's Nikkei fell more than 1% to nearly 3 months low, while Australia's X200 index lost at 0.94%. And away from global markets, U.S. oil company ExxonMobil is suing the European Union in a bid to force it to scrap the bloc's new windfall tax on oil groups. Now, ExxonMobil argues that Brussels have exceeded its legal authority by imposing the levy. The EU claims that profits recorded this year by oil companies due to high energy prices have boosted inflation around the world. According to the company's spokesperson, Mr. Casey Newton, the windfall profits tax is counterproductive, discourages investments, and undermines investors' confidence. Mr. Newton also explains further that the tax will be factored into future multi-billion euro investments in Europe's energy supply and transition. Meanwhile, Russian gas exports to Europe via pipeline fell to a post-Soviet record low in 2022. That's according to the latest data. This is due to the conflict in Ukraine and a mysterious blast which damaged the major pipeline. Russian direct gas exports to Germany, Europe's largest economy, were halted in September this year following blasts at the Nord Stream pipelines of the Baltic Sea. Russia exports outside of ex-Soviet Union will reach 100.9 billion cubic meters this year, a decline of more than 45% from 185.1 in 2021. Let's wrap things off now with crude oil prices on the international market. That's dipped today as surging COVID-19 cases in China dimmed hopes of a recovery in fuel demand for the world's largest crude oil importer. U.S. West Texas Intermediate crude remains in the red zone, selling at $77.26 per barrel with a price decline of 2.15%. Brent crude futures also experienced a downward price review of 1.93% to sell at $81.65 per barrel. Bonnet sells at $81.64 per barrel with an upward price margin of 0.62%. And for the OPEC basket, crude oil dealers are offering $81.14 per barrel with an uptick of 2.24%.